Cash value life insurance. What is it and why do I use it? Now it's a broad paintbrush, right? There's so many different opinions on cash value life insurance, but on my channel, what I tell you is how I use it and the things that I actually do. That's what my channel is all about. I only share with you things that I'm actually doing, and I can only share with you from my personal experience on how it's affected my life. Now, cash value life insurance, I'm a licensed insurance agent. I actually own my own firm called Freedom Insurance LLC, which we are located in Arizona and all 50 states. We created our own insurance firm because we found that number one, these things need to be structured properly and you need to fund them properly, and every single individual is different. These are not one size fits all, and I think that's where the industry gets a bad rap. Is agents are just setting up the same policy for every single person. They're running through the mill as quick as possible, but every single person has a unique use for this, and it's based on your age, it's based on how much you can put into it, and it's based on how much you understand about it. So I'm going to share with you how I use cash value life insurance, okay? If you've watched my other videos on my ecosystem, I focus on 4 components. I focus on cash flow, investing in deflationary assets that have a fixed supply that are outside of the US dollar, which is inflationary. We become poorer every single year with inflation. Protection, which is the cash value life insurance, and leverage. So the way that I use cash value life insurance for my kids and my family is we're building legacy with cash value life insurance. The way that I look at it is if I have $100,000 sitting in a bank account and I'm earning 1% interest on that, what do you think the bank is doing with my money? This is the first component of it. The banks make money in 3 ways: interest income, fee income, and capital markets income. So as my money is banked up, what does a bank do in a river? It stops the flow of money. They're taking my money and making it currency. So the $100,000 sitting in a bank, they're paying me 1%, they're lending it out to you in an auto loan at 6%, maybe a mortgage at 5%, and a credit card at 23%. So they're in first position. They're taking my hard-earned money, which I'm paid in someone else's debt, and they're transmuting in it to make wealth off my money. So imagine if I took that $100,000 and I transmuted it into a cash value life insurance policy, and for me, it's a supercharged savings. So I'm moving my $100,000 into a cash value life insurance policy, providing a protection component for my family with the death benefit, okay? Then we have the ability, because I have the $100,000 in there, and as they're structured properly, funded properly, and at the right time, I can eventually borrow against that cash value, putting myself in the banking position, okay? And then also I can borrow against this tax-free as I get closer to my retirement age. Now, other components of it as well is as I'm making 1% in my bank account, I'm making anywhere from 6 to 12% depending on what type of policy you do. I use index universal life. It's indexed to the market, it's not in the market. Now, it has a floor, so my principal is guaranteed it's insured. But there's also a top, right? Because it's indexed. So they put a floor on there, and then they have a top that I can't earn all the way through the roof so they don't lose money, right? So there's a lot of different components to that. So let's back up. So I have a supercharged savings, that richest man in Babylon, I can borrow against tax-free that I don't even have to pay back within that current paradigm because it comes off the death benefit, but I always do pay my leverage back, okay? So it's a supercharged savings, okay? I have the ability to leverage against it at a low interest rate, borrowing against the insurance company to do what? To feed my ecosystem, to buy more cash generating assets, okay? To buy deflationary assets that continue to appreciate. And then what I do is I pay off the leverage and I go back and do it again. The beautiful thing about that is when I go use my cash value life insurance, okay, if I'm borrowing $100,000 out of my life insurance policy at 5%, and I go find a dividend that's paying me 10%, I'm beating the hurdle rate, and that dividend can pay back the loan. But at the same time, if my policy is making 10% and I borrowed at 5%, the $100,000 is still making 5%. So think about that, what I just shared with you. If you have $100,000 sitting in your bank account, they're doing all that with it. They're making interest income, capital markets income. I'm just putting myself in first position. Now, the key to this is to understand that you are taking your hard-earned money and protecting it. The other key to understand about this is you have to have this structured properly, and you need to fund it properly to make sure this works. A lot of people are driving Lamborghinis with regular gas in it. So there's so many different components in it. So to just say there's one size fits all, right? Remember, money compounds every 7 years at 10%. So the older you are, the more money you have to stuff into this. There's rules in regards to how much money you can put into it. And in the end, it is life insurance, so there's a cost of life insurance. Another beautiful component about this that I love about Index Universal Life for me and my family is when I pass, the death benefit and the cash value goes back to my family. So I'll share with you once again why I use it. Number one is I like being in first position, being the bank. Number two is I like earning market-like returns on my money. Number three is I like to be able to borrow against my own money to buy cash flow, deflationary assets that can pay back the leverage. Another beautiful component about this is I like to have increasing death benefits on mine, because what happens is if I had $300,000 sitting in the bank and $300,000 in my life insurance policy with an increasing death benefit, my life insurance policy is keeping up with inflation, as the $300,000 that would go to my family is deflating every single time they print more money. So there's so many different factors, so many different components to cash value life insurance. The key is to sit down with a qualified agent, to go deep into your finances and really understand how would this mechanism help you, and to really understand the different components between whole life, index universal life, right? They always teach you how to insure your life. They don't teach you how to, they teach you how to insure your life, your car, your house, but they don't teach you how to insure your wealth. So I truly believe that life insurance is one of the biggest secrets of the wealthy. So let me walk you through. Cash flow. Cash is trash. I put into deflationary assets that continue to appreciate. Okay, when those deflationary assets appreciate, guess what I do? I take that and I max fund my policies. So now I created a leverage component. So I have my deflationary assets, things like Bitcoin, and my cash value life insurance. Now I have two banks that I can borrow against to buy more cash flow to repeat the process. So cash value life insurance is a big component of my family's wealth building strategy. And also my family will be wealthy from generation to generation, because every time my Boskus dies, the death benefit will go into the family trust. So I hope that helps. Remember, you need to meet with a qualified agent. Make sure you understand all the ins and outs of it, and you need to make sure that the agent structures it properly and that you understand how to fund this properly. Okay? So if you need any support at all, we have links down below or my social media platform where you can set up a free consultation with our amazing elite life insurance agents that know how to structure these properly and teach you how to fund them properly. Warriors, rise, get your shit together. Let's go.